Hey y'all, welcome to the Legacy Podcast. Tim Bratz here. Today I'm sitting down with my great friend Amanda Holbrook with Specialized Trust Services. She is my go-to person for all things self-directed retirement accounts. And I mean, if you've been following me or we've been connected for a while, Amanda is, I bring her on because I think she's probably the most undervalued resource that we all have access to. And she understands this world where there's trillions of dollars available to you and me from people in their retirement accounts that they can then self-direct into your real estate deals, into your business deals, lend you money on the business and real estate side of things in multiple different capacities, and unlock troves of capital that you didn't know was available to you before. So from a private money raising standpoint, this is a tool, probably one of the most important tools that you can understand how to utilize, because it will open up vaults of cash for you and your business. So we're gonna sit down with Amanda, learn all about self-directed retirement accounts. I wanna hear a little bit about what's going on with the folks that have their retirement accounts with her, and kind of what they're looking for, how they're deploying, what their mindset is right now on the private lender side of things, and really dive deep into all that stuff. So let's go match up with Amanda. Amanda Holbrook, one of my favorite people.
What up?
How are you?
I'm fantastic. How are you doing, Tim?
Good. Saw you in Boston.
Yeah.
Great to see you. And
Always.
you look very colored and
Thank you.
getting some tan. Yeah,
Yes.
looking good. So you're here and you focus, and you're my go-to person on all things self-directed retirement accounts. Mm-hmm. You guys are with Specialized Trust Services, and you are the go-to person for growing awareness around that space. And so you do a phenomenal job. And I know we've had you on a whole bunch of different webinars and put you on stage a bunch of times and stuff. And it's cool to just like sit down and do a podcast, right? I want to talk through a little bit about what is a self-directed retirement account, and then I want to dive deep into what you're seeing right now. What are we looking at politically? What's being scrutinized by the government? Do you think the government's ever going to get their hands on these things? I want to talk a little bit about what you're seeing from a lot of the clientele. Like, are they putting their money into assets? Are they, stockpiling cash? Are they buying XYZ with it? I want to talk about those kinds of things. And then what can we do, right? Like, where can we access these things? I think there's a lot of different places that people don't realize they have access to self-direct their funds. And, they can then go and buy properties and do some fun stuff.
What you know.
So let's talk a little bit about that. So dive into what is a self-directed retirement account, and like, how can somebody access that?
Sure. So self-directed retirement accounts are not the ones you have at your traditional banks. If you're picking it yourself off of a screen, that's not the version of self-direction we're talking here. Mm-hmm. True self-direction is when you have that traditional IRA, Roth IRA, HSA, and you get to invest in what you know. I mean, and as you know, this has been around since the 70s. This is not like earth-shattering newsflash, but you don't hear about it mainstream.
Because mainstream doesn't get paid on it.
Yeah, that's exactly it. Ding, ding, ding. They don't make money on it. So it's up to you to self-educate about self-directed IRAs. So what you do, you move funds from here to here, and then you invest in what you know. So whether that's real estate, lending, syndications we're from Ohio. There's a lot of corn and cows between the three big cities here. Mm-hmm. Could you lease land? You sure can. Can you breed cattle? Yes, you can. I know those are like off to the side, but anywho, you can invest in all of those things. So you're not pigeonholed. You're not filling somebody else's, hey, how's it going to make them money list? It's how it's going to make you, your family, your business money.
And so what accounts are available to access? Like, how can somebody gain access and understand, is this something that I can even self-direct?
Oh, absolutely. So here's your litmus test. All right, if you have any employer plan, okay, so I don't care where your walk of life is. If you were military, it's a TSP. If you were a teacher, it's a 403B. 401ks, 457s for like our firefighters and our police officers. Keogs, ESOPs, drop plans. If you were a teacher, PERS, TRS systems. Any employer-sponsored plan where you are no longer there, green light.
That's the key. You cannot be working there right now.
Yes, I have a maybe there.
Okay.
Okay, so if some 401ks have an exception to the rule, okay? Because usually the qualifying event is either, hey, I quit, or I turn 59 and a half. That's when you get the green light. So if you call your provider and you ask, does our plan offer an in-service rollover? Use this term, in-service rollover, okay? So what that means is you can move your vested balance while you're still there. Now,
is this somebody who's usually over 59 and a half though?
no, this
So it
is
could be
under
any age.
any age.
Okay.
But I mean, you know customer service, Tim. So if you call, ring, 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 hey, does our 401k allow an in-service rollover? The customer service agent on the other side is programmed and scripted to say, no, 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 no. Yeah, okay, well, every 401k plan is written differently. So appreciate all of the time and effort that you took in to look at our personal 401k plan. Can you share that with me in writing? And it's like a 50-50 shot if they can move it or not. I had,
Interesting.
yeah, I just had
I didn't realize it was that, that likely that you could.
Yeah, back in 2008, they changed a lot of them because.
Now, is that for government employees or just private sector?
No, private. Yeah.
All private sector.
If it's government, you're not touching your TSP, guys, until you are no longer there.
All right.
You can take a restriction-free loan against it, that 50K, and pay it back to yourself. But yeah, they're not touching it.
Got it. And so if you leave your job or if you, and you had a 401k or an IRA of some sort with that job, now you could take that and it doesn't have to be invested through Fidelity or Charles Schwab or any of the other, advisors
Big
out
names,
there,
yeah.
right? Like you can actually take that and you put it with a different custodian, which is a company like you
Specialized
guys,
Trust,
Specialized Trust Services. And then you guys only act as a custodian. All you do is you hold the money.
Correct.
And then they tell you, right, and me as somebody with my $100,000 in an account, move over to you guys. You guys then wait for me to allocate wherever I want you to send it.
Yes.
So I'm not personally touching the money.
Correct.
You guys hold it the entire time, which makes it a non-taxable event.
Yep.
And it allows it to then just be self-directed. So you mentioned a whole bunch of different things that you can lend on. I can lend Marty money in order to go out and buy a single family house, or I can go buy a single family house with my $100,000.
Yep.
Right? You can invest it as an equity into a different business. You can invest it into a syndication in real estate. You can invest it into all sorts. Is there anything you cannot invest it into?
Yeah, so the key piece here, what you said, you gotta boss it around. I get that question a lot. Okay, well, I'm gonna move it over. All right, great. Well, guess what? It's called a self-directed. You need to tell it what to do.
Yeah.
It is not a done-for-you account, It is a self-directed
And
account.
you're not allowed to tell them where to invest it either.
Correct, that's what I wanted to touch on. Like my role, and I mean, that's one of the beautiful things about our firm is I've got 15 years experience just myself in the industry. So I can show you, hey, I've seen it done this way, and this way. You can say, oh, love this, hate those, and we're good. It's no awkward silence.
Yep.
It's like all good. But I get this question a lot too. So what are the no-nos? The IRS does not write the rules and say, here are all the beautiful things you can do to take advantage of the tax code. It's what you cannot do. So here they are. Number one, self-dealing. This is the number one what-ifer, right? What if I did this, Amanda? What if I did that? Okay, self-dealing. If you are benefiting in the here and now from what your retirement account is doing and not benefiting solely in retirement, don't do that. So, example, hey, Tim, I've got this cash cow of a house. It's, freaking ridiculous as far as ROI. Can I just buy it for myself and make it all tax sheltered? Nope. I own a company 100%. Can I just lend money to that company?
You can't buy it and live in it. You can buy it with your IRA and invest it and flip it.
If you already owned it personally, though?
Yeah.
Yeah, if you already owned it personally. But yeah, if I'm buying it from you, all good.
Yeah. You can't buy it from yourself.
Yeah, can't buy it from yourself. Number two is the family tree. Your kids are getting to the age where they're doing that project in school, right? So just think of the trunk, you guys. So your spouse, parents, grandparents, children, grandchildren, beneficiaries, fiduciaries, off limits, okay? You can't go up and down on the family tree. So you couldn't lend to your dad can't lend to you. You can't buy a rental in your IRA and rent it to your kids. If they branch off, brothers, sisters, aunts, uncles, cousins, nieces, nephews, fair game.
So as long as it's not linear in your lineage,
Correct.
then you cannot deal with them. But as soon as it's a sideways branch on the tree, then it's fair.
Fair game.
So I can buy a property and I can rent it to my brother if I wanted to.
Absolutely.
Got it.
Yeah, he could be your private lender on your deals, all fine. The last one has nothing to do with our space, but like collectibles, artwork, stock of a subchapter S company, and life insurance products, you can't do. Those are just IRC 4975 no-nos.
Artwork, life insurance, what was the other one?
Stock of a subchapter S company, so essentially
gotcha.
S corp, and life insurance.
Got it. So there's a lot open though, right? There's
Oh, yeah, now it's
all the
Pandora's
notes,
box.
all the equities. I mean, pretty much any business, any real estate, you could still do as long as it's not self-dealing or an S corp. It sounds like.
Yep.
Love it. What about an LLC that pays taxes as an S corp?
That's fine.
That's okay, right?
Yeah, that's
Okay.
tax selection.
So there's a lot of money. How much money is out there in retirement accounts?
37.4 trillion.
$37 trillion. Okay, so I think this is important because one, it's a way that you can access your own funds and make better returns and safer returns by self-directing your own retirement accounts. But secondly, I think it's also important for those watching as an incredible resource to raise private money for their real estate deals or
Yeah.
for their business deals, right? And being able to understand that this exists so that way you can educate somebody else on it so that way they can then tap into these reserves and then allow you to allow them to invest in your deal.
Yeah, it's 110%. Because majority of folks, you guys, don't get like exposed to this world
Right.
whatsoever. And I mean, as a business owner operator, I mean, you are controlling more of your future return and outcome if you're controlling the cash, right? If you're controlling the capital, like that's the secret sauce. You know, you're not relying on others, you know, that can change financial regs or their terms or adjust or balloon payments. You're controlling it all. But to get those funds, especially from retirement accounts, you have to tell them that they can do that, right? So, I mean, if I'm telling them, I just sound like I'm standing on a glorified soapbox, you know, like, oh, self-directed, yay.
Yep.
You know, you're telling them, you know, and we co-educate together.
I think that's the key.
Yeah, it has to be that tandem co-education of, hey, did you know? Because you don't want to feel like, hey, I know we're buds, but give me money, invest with me. I don't want to sit here and be like, you know, self-directed IRA, talking head, but I also can't advise. Like, I can't recommend or endorse specific investment or investment sponsors. So you guys see the yin and yang relationship there. So it's just planting the seed of, as far as you take the technical conversation, and you've heard me do this a million times over, the hey, did you know, right? Like, you can talk self-direction pretty well. I'll give it to you.
Yeah, I appreciate that.
You've got a gold star
I
there.
appreciate it. But I still don't, right? Because
Yeah.
I don't, it's one of those things that can be seen as so complex that it's like, oh, well, I need to know all the answers because Tim knows all, like, I don't even try to go down that road. I educate enough where I make the private investor aware that they can access
Correct.
money through their self-directed retirement account and say, hey, listen, I don't have all the details on how to do that for your situation specifically. Let me connect you with Amanda. And the beauty of it is Amanda, although you don't work for me, you do work for me because I'm sending you clients because you're gladly taking those clients because they're helping you build your business. And then Amanda helps them self-direct it. And then Amanda says, all right, go talk to Tim about what he's got for you because I know you guys were talking about some deals. And then sends them right back. And then I can help direct their funds, right? Because they just needed access to it and they didn't know that they could even access funds that way.
Absolutely. I mean, half the questions that I get, you know, it's how do you, especially when it's someone that hasn't come from like a relationship, you know, someone, and there are, you know, they've just self-educated and figured out that this place, you know, the space exists. Where do I find those deals? Because they're so programmed to finding it off the screen. So they're searching for someone like you. They're searching for someone like you. They're searching for those deals. It's not the what you know, it's the who. So the more that we put stuff out there like this, co-education, guess what's searchable today, guys? Are we clicking here?
And so like that's why I have Amanda on as much as I possibly can whenever I'm doing social media type stuff or we do a market update or whatever. I bring on Amanda so that way she can then educate on it. And I don't have to try to explain it or be the expert on it. I can bring her in, right? It's people that know me, that trust me, that acknowledge, what we've accomplished in real estate. Amanda comes in as an expert on the self-directed retirement account side of things, helps plant that seed that people can go out and capitalize on self-directing their IRA or their 401k or their TSP or any of those different things. And then they reach out to Amanda, and then they can reach back out to me on deploying those assets. So, like, if you have any sort of folks that you're raising money through, or social media, whether you have an existing social media platform, you're trying to grow a social media, like, reach out to people like Amanda, specifically Amanda in this capacity, but all different experts, a CPA, an attorney,
Yeah.
a marketing specialist, like an operations specialist. Like, reach out to these people and have them come in. It builds more influence for you with your audience, because they're bringing all this value to your audience, and you don't have to do it, but you get all the credibility
Right.
for it, because you were the medium in which that value was passed on. So super, super important. It's how I grew a lot of my business.
Yeah,
how
absolutely.
I tapped into a lot of self-directed retirement stuff. So what are you seeing right now in the marketplace today with politically? Is there anything going on that we have to pay attention to? And then, like, what are your investors looking for, looking at, doing, like, with their money in the self-directed accounts?
Yeah, so, I mean, it's an election year, so if you say politically, I mean, no one has a crystal ball, but no matter what happens, at least half the population's not gonna be happy and half will be happy, regardless of what side you're on. But that has an effect in the markets. Historically, it's always, you'll see a little bit of up and then it goes down. There's a lot of uncertainty.
Yep.
So, I mean, I've had this conversation pretty much weekly this year of, hey, I'm moving stuff and I'm parking it to see what happens. They want to see what shakes out. They want to see what tax laws change before they're making moves, before they're converting to that Roth IRA.
Interesting.
So here's my thought here. You have to make the best decisions for you, your family, your business based on the way that things are today. Don't sit and wait for the rate to drop. Don't sit there and wait and let other factors that you have no control over, I have no control over, stop you in your tracks from making those moves. Make the move. Otherwise, you're going to be sitting on the sideline singing the shoulda, woulda, couldas. And I mean, we've all seen that. We've all had that experience. I mean, I know I have in the past, and it's just like, but your kicking is your own, and that's always entertaining to
It's
watch.
more important to just keep it in motion.
Yes.
The momentum of keeping money in motion is more important than trying to time a specific deal
Correct.
or perfect time. Like, no, just
There's
keep
never-
it in motion, and generate any revenue is better than not generating revenue and then hoping to generate the top. Like, people talk, if you invested in this stock at this time and you sold it at this time, then you would have made this much. Nobody does that. There's not a single person who actually did that and bought exactly at the bottom and sold exactly at the top. You know who wins is the person who just invests continuously over time, and it's a 45-degree angle of growth, right?
Yes.
Like, that is what you should be looking for. It's the most stable, it's the most predictable, it's the safest way of growing your assets and growing your returns, as opposed to just trying to time the market.
Yeah, and what all that leads to is you have to look at your diversification mix. For those that are just learning, all of those things you just said, that consistent, predictable money in motion, you have to look at that as far as your mix. If you have that all in the market and you're trying to time it, that's a guessing game. That's called gambling, y'all. That's not a strategy.
Yeah.
You have to put it in stuff that is tangible, consistent, predictable, control. Is there a degree of risk in everything you do? Yes, but being less risky does not mean you are foregoing and giving away your profit. You have to look beyond. Yes, you can mitigate it. So that diversification play. So what I see a lot of folks do, and especially because rates have been higher, et cetera, tons of private lending, which, I mean, you guys, that's just when someone's the bank, right? That's usually how most folks will dip their toe in the water. Even if they're looking to, someone can look at you, Tim, and be like, oh, I want to do exactly what Tim Ross is doing, but you don't sit there, you just want to earn while you learn. Get in the game and play, even if it's passive as an investor or as an equity partner.
Agreed.
Get in, play, earn while you learn. It's always nice to ride somebody else's coattails and learn what to do, what not to do. I mean, that's the beauty of aligning yourself with the network and, your tribe to know where you want to go. And I think I'm seeing a lot of folks finding their way there, and a lot of, how we were saying, share your success and share your story. They're bringing others along. Like the in-service rollover thing I was telling you about. I had a doc in Utah. He was freaking awesome. He was relentless. He was like, we're going to get that money. It's my money. I've been with the same freaking retirement, like the same hospital system forever. It was like, he was there almost 30 years, 25 years. So, I mean, surmountable amount in that 401k, which he was not 59 and a half. So they were able to do the in-service rollover, so he did his deals, happy as a clam. He must have done like a lunch and learn or something, but there's probably like about 10 more docs that came. I'm sure that company that holds their 401k was not too happy. But they're all self-directing together. Now they're all getting in on the same deals. But it's because that one person asked, and got the answer that they wanted. Now, it's just the ripple effect.
I love that. I love it. And so what kind of timeline are people, I mean, you said it's mostly loans and notes now, right? Which makes a lot of sense because, I mean, that's what I'm seeing just outside of the retirement accounts too. It's just, syndications are cool to invest in, and startup businesses are cool to invest in until they're not paying cash flow and dividends and stuff like that anymore, right? And it's like, well, I got equity, but, I forget, I missed that cash flow piece. The beauty of a retirement account is you don't need necessarily the cash flow because you can't touch it, and you could delay it. So it opens you up, to maybe longer term plays or development deals that aren't paying out in cash right away, or things along those lines where you have the equity growth and maybe a deferred or accrued preferred return that's going to pay out eventually. But I mean, that's the beauty of this. I see with cash, people want definitely the cash flow now has been a lot heavier, but they're a lot more flexible. And I'm more flexible, right? Whenever I lend through my self-directed retirement account, I'm like, hey, that's fine. I don't need any cash. I don't need any dividends right now. Like, just give me the equity growth or some sort of big pop in a couple of years. What's typically the timeline that people invest in any given self-directed investment?
When you're talking notes, they're anywhere between 6 to 18 months is pretty much a trend. I'd say that there's some larger projects that will go 3 to 5 years out, or that it's a fund that keeps it moving in multiple projects. But there's other investment types like, a turnkey rental. That's what I would call, more of a sticky asset, because it is producing that cash flow. I mean, that can be for years and years and years. I mean, think of someone that's in retirement, or even, owning a tangible building, a percentage thereof that's providing that consistent, predictable monthly cash flow. I mean, for you and I, we're not 59 and a half yet. Oh, God bless.
Excuse me.
That's okay. Allergy season. We don't need that cash flow right now.
Right.
That cash flow goes back. We're not taking our kids to Hawaii or Disney. It's stuck in there. But for someone that's in retirement, that's even more important, so that they can get that consistent, predictable monthly return. And, 59 and a half, you guys, that's how I always joke and say turning 21 all over again. You can take that money out, and no slap on the wrist by Uncle Sam. Like, you're good, green light. But that's where you should be having that diversification conversation, like not at 59 and a half, like way before.
How are you seeing that diversification work? Like, how are most people allocating? Could you give me like general percentages of how much is going in? Like, I'll give you an example. Saw a gentleman who manages $40+ billion for ultra high net worth.
Okay.
He only has 160 clients and manages over 40 billion. That's an average of about 250 million per person. He has their allocation in 4 different buckets. One is dividends, like notes, right? Anything that's a predictable cash flow, like, or not cash flow, predictable dividend, right? So any sort of loan that pays a predictable dividend. Number 2, and it was 25, 25, 25, 25. So first one was dividend. 2 was real estate. 3 was private equities, like private businesses that are privately owned. Maybe, they have a minority stake or whatever, are involved in it. and then the other one is public equities of the stock market and those
market.
kinds of things. So that's how they have it diversified. Have you seen anything similar, or I don't know, I guess are people all in on one asset? Like, I know my self-directed retirement account is 100% in real estate. You know?
You know, I think the goal is to get there. It's funny that you list those top three. Those are the top three self-directed investments, period. You know, so I think the goal is to get there. We usually see it more weighed because it's just as you grow. You dip your toe in the water. I started with notes.
Yep.
Okay, now I'm gonna get into real estate because now I understand that. Okay, now I'm working with business owners. Now I'm gonna invest in their businesses. So what you just listed is kind of the progression of your typical self-directed investor. Is some get comfortable, you know, some will stop right here. You know, some will go up to the real estate part and say, I don't want to deal with, you know, tenants, toilets, trash, and managing property managers. I just want to be a bank, you know, and then others go all the way here.
Yep.
You know, but I would say progressively over time, say you've been self-directing 10 plus years, you know, those three are going to be your mix.
Are there many that are investing in, I don't know, a CD, right? Can somebody take their $100,000 out, put it into a CD that pays 5% right now, and self-direct it into a certificate of deposit?
No.
Nobody's doing that.
No.
They're looking for bigger returns than that.
Yes.
And so they're not
If
buying.
anything, they're taking it from that IRA that's in a CD, and they're moving it over here because they're like, I mean, what's your 5% return getting you these days?
But I guess the question becomes, you know, if they're in between deals, are they sending it over there and then bringing it back, or they're kind of just letting it sit?
No, okay, gotcha. No, so remember, when you self-direct, you're not foregoing anything that you're already doing. So you can do a brokerage access account, or if they have an IRA LLC structure, it's just, you know, bolted on right there. You know, so a lot will, they just move it just via ACH to usually something conservative. I mean, I'm not the broker, so I don't see inside that brokerage account, but they're parking it in like an ETF or index fund, something like that, to your point. So it's earning something versus nothing, but then they have that quick access of, you know, hey, same day I have those funds ready and I could do your transactional funding. Versus, I get this question a lot, well, if I moved it from, you know, XYZ bank over to self-direction, which that transfer process, you guys, you know, 2 weeks usually or less, it depends on your company, you know, that could be a deal killer depending. Like, you don't want to have to go up and over. So that's the point with self-direction. So yeah, that's a normal one. I have some, I think, that fancy themselves like almost a wannabe day trader. I don't even know how that bridge happens, but if like cash flow comes in, it just eats their souls if it's not moving at that time. So they've got to, you know, get in there and fiddle around. They like to be more active. Hey, whatever floats your boat. That's the beauty of self-direction.
Are there people that leave the stock market and whatever brokerage they had it with, self-direct it, and then redeploy it into the stock market so that way they don't have to pay the fees and all that kind of stuff? Does anybody even do that?
Yeah, some will, but that's not the only reason they're doing it. Yeah, if they're not, I don't ever see anyone coming over just to come over and do the stock market. That's counterintuitive. I mean, I would tell someone like, you know, if that's your gameplay, like self-direction is not for you yet. You know, like that person that is not comfortable making their own decisions, and you know, we've all met that personality type. Like if that just stresses you out, like self-direction's not for you. But if you're comfortable making decisions, you like the control, you know, that's right in your wheelhouse.
Love it.
Yeah.
So what do people need to be aware of as they're moving over their retirement account, as they're deploying funds? Are there any concerns of like the government stepping in and accessing these accounts or anything along those lines?
I always love those questions.
Yeah.
My doomsdayers.
Yeah.
They're going to change the Roth IRA. They're going to tax it all.
They're talking about it, right?
I know. And it's been talked about for years, you know, because no one knows how to spend money appropriately in a government agency anywhere, you know, what have you. Here's the thing, you guys. It goes back to that of, you know, you have to make your decisions today based on the rules as they are today. You know, so if you have a Roth today,
Go make as much money as you possibly can inside of it.
Exactly. Like, don't worry about the stuff you can't control. And if they do change the rules, what are you going to do about it? Nothing, you know? But you've been grandfathered in. Like, that's the key. So the sooner you start those vehicles, like those folks that had Roth IRAs that were now inherited before the Secure Act, they have a stretch Roth IRA that is tax-free forever for their children's children's children.
That's those legacy IRAs.
Yeah. you know, they tried the stupid Secure Act, put like a 10-year like handcuff on it, so you got to take the money out. Let's hope they come to their senses and just do away with that, because it's really not applicable to a Roth. Tax deferred accounts, you can see why they did it. Why they do that, Tim? They want
the money.
No, they want the money. They want you to pay the taxes. But
That's
yeah.
a good point. So I want to ask about Peter Thiel and the king of the Roths, right? So Peter Thiel had a self-directed retirement account that he opened up in, I think, in 1997, and he had some equity in, I think it was PayPal.
PayPal.
And so he buys into PayPal for $1,700. PayPal ends up selling or going public or something, I think in 2001. And he puts $35 million back into his Roth IRA.
Yep.
Now he's got this treasure chest of essentially utilizing it as venture capital into all these other deals.
Yep.
And he put it into, I think he put it into like Uber, and he put it into all these other different Airbnb and all these other ones, and ended up today, he's got it in Palantir, which he's the owner of, and today it's worth over $5 billion. A $5 billion Roth IRA. I think it was what's the company that Forbes had him as like being worth $2.5 billion or something.
Yeah.
He has a $5 billion account on top of that.
On top of that, that's tax free.
Yeah, that's tax free.
Forever.
And so like, how is somebody able to do that? How are they able to then invest into these different businesses and allocate a certain amount of their retirement account into some of these moonshots that they might be involved in or not involved in?
Yeah, I mean, one, it comes back to who you know, because when he did that, it wasn't public. It was private, you know. So how do you think they get these private companies through the R&D phase, et cetera, to get them launched? They raise capital, you know. So for you to get shares of that company, you got to know, like, you got to know the offering, whether it's fee-based advisors or within your network, et cetera. That's how he was able to do that, you know. But when you
he was
put
in the
it
network of all the tech startups and
yes,
stuff. So
that's exactly
he hung
it.
out in these circles and, you know, these buddies who were doing deals back and forth.
Yeah, he got the backdoor deal. I mean, that's exactly what he did. And when you own a percentage of that in your Roth IRA, it's 100% tax-free forever. So now all of his returns, instead of, you know, investing as he's Peter's Roth. All of it is just tax-free forever. But it was the who he knew. And some of those are publicly traded. Like he got in when it was publicly traded as well. But, you know, that's come up in conversation of like, how could he do that? And I mean, it didn't start off that way is I think the takeaway here, you guys. You can start with very little and get it to be very, very big by diversifying into stuff that is not just your traditional, I'm gonna stick it in a mutual fund and just buy, hold, hope, and pray. Like, that's not it. You have to find those non-traditional deals. Now, the next topic I think we should do is how do you and I find those deals? How do we get our kids' Roth IRAs in those, Tim?
Truly, like, how does that happen? Like, how do you get in? And how do you, like, I have the software company, right? My software company that I'm developing. I'm not a majority owner of it, right? I'm bringing, well, my team has equity in it, and then we're 50-50 between my team and another gentleman who's really the developer side of it, who was a big investor of ours, took a look at, you know, all the different softwares that we were using, the property management software, the CRM software, the accounting software, the workflow management software, the investor management software, the shit that's written up on the whiteboard, like Google Docs. And he's like, how do we have 7 different applications open to manage a property on a weekly call? And it's not everybody has access to it. Like, how do we make good decisions if if nothing's talking to each other? And so that spurred an idea of him to, like, say, take all these things, consolidate it into a singular software, and then that turned into AI coming in and doing property management and being able to lower, trigger and let you know when you're overpaying for your property taxes and you can appeal lower. You're overpaying for insurance, you can get a lower rate. When from an operational maintenance and management side of things, like how can we reduce the amount of labor needed, the supplies, like all those other It's like, it's really, really, really good, and it smokes all the other management softwares that are out there right now. And so we're bringing that to the market probably in early 2025. But what does that look like? Can I invest in my Roth IRA into that company as an equity investor?
So because your ownership, okay, this is called the 50% rule, guys. All right, so as long as the combined ownership of disqualified individuals, so that list, is not over 50%, that's possible.
Okay.
Yep, so that's possible to do. I mean, sounds like a hot opportunity.
Yeah. Well, that's the thing. Like, I know, and I'm not active in the day-to-day.
No.
Right?
You're passive.
I'm a participant in, talking through ideas and strategies and stuff like that, but I'm not active in that capacity. But if I became active, would that then make it disqualified?
So you got to be careful in what active role, and this is where you would always want to talk to an attorney, because if you're like a C-level or highly compensated and you're over, I think they say 10% if I was reading the rules, then that becomes red flag, no.
Got it. Yeah, so it's fascinating to think through some of the stuff, but you really need a unicorn of an opportunity in order to do what Peter Thiel did.
Yeah, yes, that's I mean, we get it, guys. That's we're talking over the moon.
Yeah.
But if you get even, I'd be happy with a fraction of that moonshot.
Yeah.
I don't know about you.
I'd take it. Because that's the hardest thing is getting the account to grow dramatically, right? Because if you can take an account from $50 or $100 or $250,000 and get it up to a couple $1 million, there's just a lot more movement, right? You can swing the bat at a lot more opportunities, put little seed amounts into many different companies, which if 1 out of 10 pops, then all of a sudden it gets to 15 million or 20 million.
Yeah.
And that's the key is what are you seeing? And we'll close out with this one. And then I want to make sure everybody gets your contact information too.
Sure.
What is the best way to grow an account quickly?
The best way to grow an account, all right, narrow it down.
If I have a Roth IRA, self-directed Roth IRA, and I have $100,000 in it, what's the best way to get that up to a point where I can then invest it in or let's say somebody just opens one. Let's say somebody says, hey, I want a Roth IRA and I can put $7,500 a year into it. It's what can I do with that?
What the heck can you do with that?
How do I get it up to 100 grand? How do I get it up to 500 grand? How do I get it up to $1 million plus? So that way I can really start making some moves with it.
I like this question. Okay, guys, this is where it comes to, and it's the same mentality you use for your cash, right? It's creative deal structure, So and even going back to the Peter Thiel thing, it doesn't take a lot. I mean, you can wholesale. What do you got to have in a wholesale? I mean, for a Roth IRA consideration, I know some of y'all don't put anything in there, but put $1,000 in there, okay?
For earnest money deposit on
Earnest money deposit on a deal. I had a guy do a commercial wholesale deal, and it was over 900K return. I mean, that's Now, granted, they wanted some of that in their personal name, they wanted to live off of some of that, but they're holy tax problem we're gonna have. So structure it so that a part's in the Roth, and that's what they did.
And so they could take the Roth that got 50% of that, and then they could personally have 50% of it?
Yeah, it's just the titling, guys. That's an easy one. 50% undivided interest you, 50% undivided interest your Roth. That's a quick one, and then then you parlay that into other deals. Now you can take bigger swings, you can do bigger projects. Flipping is another easy one. Participating in other people's deals. When you talk to a traditional advisor, they'll talk about the rule, the rule of 72, I'm sure. Everybody here knows the rule of 72.
Yep.
It's the amount of time it takes for your money to double. I need to look up the stat, what the average is in the stock market. I just did a webinar yesterday, 2 years with private lending. And she's not doing anything crazy astronomical, didn't come from a real estate background, et cetera, and was able to double her money in 2 years. That's what happens when you focus and take control. The other piece is when you're starting with those different buckets, if you have 100K, great. But what if you have 7,500 in this account, and then you have your wife's Roth, and then you have this old 401K and a kid's account? Now you have all these different buckets. How do we get them all working together? It's you got all these different pots. I mean, I do consolidation of accounts all the time. The record's 17 FYI. So
Really?
if you're that person, don't feel bad.
That's probably Mark Evans.
If you can beat 17, bring it on.
He loves doing that. But you could take all those different accounts and pull all the funds into a
together.
singular deal.
Yes, that's exactly
And
it.
those accounts can be with your mom or your dad or your kids.
Yeah, you partner with anybody.
Right. So you can partner with anybody and put it all into an account. It's just the operator of that deal cannot be self-dealing.
Correct. No self-dealing. That's exactly it. So the key takeaway
Or you
is,
grab it, any of your buddies, right? Everybody throws 10, 15, 20 grand into a single deal, and now you got your $100,000 there. And now you can get involved in deals that you couldn't get into before.
that's exactly it. So I think we're just conditionally, like the conditional mindset of, hey, this is what I have to work with. What can I buy with this? It should be, hey,
like that.
here's what I have to work with. Now I want to get here. How can I fill the gap? What does that look like?
Well, I like you have the solutions, but you don't know what somebody's problem is until they bring that question to you,
Correct.
right? And so like, if you have a self-directed, or if you don't have a self-directed retirement account, contact Amanda so that way you can put one together. And then as you have questions along the way, like I'm learning things as we're sitting here right now, and I've been learning about self-directed since 15 years or so, right? Like been studying this stuff and understanding it, and like always be asking questions, right? We don't need to have all the answers, but we know who has all the answers, and that's why you're a phone call and email away. And you guys do a phenomenal job, by the way, of like
Thank you.
over communicating, making sure that we have everything, making sure like it was I knew that I was the bottleneck every single time because you guys made sure that the ball was not in your court. And it's like, send it back to Tim, send it back, he's got to send us this or whatever. Like, so I knew that if there were any delays, I knew it was going to be on my part, not because of you guys. You guys were like moving things along and dragging me along, even though I was traveling and all this stuff as I rolled my stuff over. And so couldn't say enough good things about you
Well, thank
and
you.
the team,
I
and
appreciate
you guys
that.
are rock stars. So how do people get a hold of you?
So A. Holbrook at irastc.com via email, 505-514-0587. You could always call my direct line, get my link to my calendar in here. That's always the easiest.
Perfect. And we'll put all this stuff in the show notes so that way people can
Absolutely.
email you, schedule a phone call, reach out to you directly on all that stuff, because I think this is like the most underutilized tool in raising private money and in investing in deals. Like the bottleneck is always access to capital, and this is such a large tranche of money that's out there. And if you understand how to educate somebody on how to gain access to these funds, and you got the right connections with Amanda and her team in order to help extract and put those funds into a self-directed environment, and then it comes back to you, then you can start borrowing money, you can start having people invest in your businesses, invest in your real estate deals, invest in your syndications, whatever that looks like. Having this as a tool and tool belt is a very, very, very powerful tool.
Yeah, it'll definitely move the needle. And, specializedtrustcompany.com is where you can check us out if you want to, do the Google search and all that fun stuff. But no matter what your need is, whether it's your own account or you're raising private money, I put together a private money kit. Just reach out. I've got tons of resources, and we're here to help. It's just, we're a member of your team. Like you said, you be that person of value to those that you want to work with. So whether it was marketing, CPA, attorney, specialized trust with, self-direction, bring that, be the person that everyone goes to for that. So like I always joke, because I have a young son, so you're assembling your Avenger squad.
Yes.
Okay.
It's the power team.
Get your superheroes together.
100%. And you guys are like, again, I love it because you're not on my payroll, but you work with me in collaborative effort, because it's a
win-win.
It's a win-win. We both are working in the same direction, and helps your business, helps my business, helps the investor's business, and all of us are able to win together, and it's a great resource. So just make sure you reach out to Amanda and Specialized Trust Services. They're absolutely amazing at what they do, and I don't get anything from saying this, right? I utilize them. I send all my investors to them because they're so good at what they do, and they're the best in the industry. So appreciate you, girl.
Appreciate you. Thank you,
for being
Tim.
here.
All right.
Hey, I really appreciate you guys being here for the Legacy Podcast. If you would, please subscribe, like, and ask any sort of questions that you have in the comments of this video. I'd be happy to create some other content and answer any sort of questions that you might have. So I appreciate you being here. We're here every Sunday. I'll see you next week on the Legacy Podcast.